Awesome. Welcome to the call, guys. Appreciate y'all for taking time out of your Saturday night to hop on. Promise you it's going to be worth it. Okay, you're going to get some valuable information. We started to do this training last night, and what ended up happening is the weather was so bad down here in Fort Lauderdale that my power kept going out, and you know what happens, the router disconnects. It was just a pain. So now that we're doing it tonight, I see more of you guys are able to actually join us, so it actually worked out. But you know, tonight we're going to be talking or doing some charting basics. All right, so tonight's call is going to be really, really basic, but it's going to drive home some of the concepts that you guys have probably been learning in the academy. So what I recommend as you're going through the information in the academy, right, at least what worked for me to really grasp the information, is you want to watch the academy videos, right? They're the pre-recorded videos that teach you about the vocabulary, the terms, the concepts. It gets you understanding, you know, what things mean. But when it really starts to make sense, guys, is in application. That's why I always push for you guys to start your demo accounts right away so that you can start placing demo trades that we're sending out, because the things you're learning in the academy are going to make more sense when you're physically already in the action. Okay, so tonight what we're going to talk about is some chart analysis, some of the things that you look for when you're looking at those charts, what things mean, and what you can start to look for to start getting better at calling your own trades. Now, remember, if you're brand new and this is still your first month, or if you've just gone live, for the first month, guys, just take the trade signals, okay? Take the trade ideas that have been being sent out in the group or from the educators, so you could save your money. You know, we want to minimize loss for your real account. Now, the stuff that we're going to talk about tonight, you can feel free to do your own thing in your demo account. It's fake money. You can go ahead and see if you're right, see if you're wrong, but you don't want to take that risk with your real money, all right? So today, I know some of the people on here were on last night, and we kind of started before we got kicked off, but I'm going to start all the way over from the top with the charting just for everyone who's on here who was not on last night, okay? So let me go ahead and bring up, not this guy, right? Let me bring up TradingView. Let me know, guys, if you can see my chart, okay? And let me do what I usually do, which is log on to the call from my phone so I can see the chat while I'm sharing screen. So y'all give me 1 second. Okay, 1 minute. Okay, perfect. So you guys can see the chart. Awesome. So we're going back to the very basics, okay? So for some of you guys who've been here for a while, this is gonna be super probably like basic for you, but repetition is the mother of all learning. Nothing's wrong with going over it again. So the website that we go to actually look at charts and where you wanna do your chart analysis, guys, it's called tradingview.com, okay? Go to tradingview.com, write that down. That's gonna be like your best friend, because you're not going to be able to do a whole lot of analysis on MetaTrader on your phone. Just because the screen's so small, you can't really do draw a lot of the lines and stuff that you'll see me do tonight on that app. So TradingView, if you're going to be working 90% from your phone or 100% from your cell phone, download the TradingView app, okay? You can use it on your phone. I would recommend, if you can, do it like on an iPad or a computer, just so you have a bigger screen. If you have a smart TV, you know, things are so compatible now, you can literally cast your phone to your TV, and then you can do the stuff on your phone, but you can see it on a big screen, all right? So download the TradingView app. When you go to TradingView, create a free account. It's free, okay? I have a pro account just because I want to get alerts to my phone. We won't even talk about that tonight, but you can get a TradingView account for free. So you literally go to tradingview.com, create a free account, and then you have access to all the charts for every single currency pair that's available in the markets. So when you come to TradingView, guys, and you log in, you want to click this button here that says chart, okay? That's going to bring up your chart view. When you click that chart view, guys, it's going to populate a chart, all right? Now we're going to go over some real basics, and then we'll kind of finish off where we left off last night. So I'm going to clear all of this stuff on the chart. So this is a chart, okay? This is a price action chart for a currency pair. Now you've got to ask yourself, what pair are we looking at? If you look at the top left of your chart, guys, it tells you. We're looking at the British pound versus the US dollar. So we're looking at GBP, USD, okay? If you've already started the academy, you should already know that currencies they come in pairs, okay? It's gonna be two currencies. So this particular one is GBP USD. Now, what does these little squiggly lines represent? These little rectangles, guys, are called candles, okay? You should have learned this in the academy. So some of this is gonna be repetition. And if I'm saying something that totally doesn't make sense to you, guys, feel free to, don't unmute yourself, just drop it in the chat, okay? Just because when you unmute, sometimes it kind of throws off my train of thought of where we're going. So just leave it in the chat. I'm gonna be reviewing the chat all the time to answer the question. So I got you, all right? So each one of these candles represents a period of time. So always remember that candlesticks, each candle represents time, okay? Now, y'all remember back in the day when we were in high school or elementary school when we had X and Y axis? Y'all remember that? Y'all know we never use X and Y axis in real life ever, but now you're gonna use it, okay? So what is it? Your X axis, which is your horizontal, represents time, okay? So if you look at the bottom of the chart, it shows you the time and date. So this right here shows you, this is July 6th. You know, and if you go even deeper, it'll tell you the time. So this shows you July 15th, July 16th. The bottom tells you time, where you are in time. The Y-axis, guys, these numbers on the, going vertically, show you the price. So remember, in foreign exchange, what we're doing is speculating on whether a price of a currency pair is gonna go up or down. So this just tells you where price is currently at. So let's look at this really quickly. The last candle that's on your screen, always to the far right, is current, is where time is right now, where price is right now, in this moment. Now, the markets are closed on the weekend, so that's why this line is not moving. Normally it's fluctuating all the time, but the markets are closed, so there's no movement right now. But as of Friday at 5 o'clock, when the markets closed, price closed right here, where this teal line is. And if you look to the right, you see the price. It's 1.25674. That was the last price on Friday when the markets closed. So when you want to know what price is at, you look at the Y-axis, and over on the bottom, on the X-axis, it's just telling you time or the date, okay? Now, each candle, like I said, represents a certain amount of time. It all depends on what chart you're on. So you see how this is GBP USD? See how this says 4 hour? This is your time frame. This basically means that every one of these candlesticks represents 4 hours in time. So if we look at it, this here, let me see if I can take something off, snap. Right here shows you, if you look at the bottom, right, where this candlestick is, where I'm at with my cursor, it's July 16th at 1 o'clock. The next candlestick is July 16th at what's 17 o'clock, right? But you see it's 4 hours later. So 1300 and 1700. It's 4 hours. So one candlestick shows what happened with this price over the last 4 hours. Does that make sense to you guys? So based on which time frame you choose, each candlesticks represent that amount of time. So if I was to change this from a 4 hour chart, guys, and go to a 1 hour chart, what does each candlestick represent now? How much time? Drop it in the chat.
1 hour.
Drop it in the chat, bro. Remember, a part of success is following instructions, okay? So drop it in the chat. I got you. You are right, though. 1 hour, okay? And guys, don't be afraid to participate in the chat, all right? We want you to participate because that's how you're going to know if you're getting it right. And if you get it wrong in school, this is how you learn, all right? This is a no judgment zone. That's why we're doing this. We want to make sure you're retaining and learning the information. Cool. So 1 hour, okay? If we were to move this to a 15-minute chart, now what does each candle represent? $15 minutes, exactly. All right, now let me show y'all something. I'm gonna go to the 4 hour chart, and I'm gonna highlight an area just so you can see the difference. So if we're looking at, let's say this red candle right here, right? Let's look at this right here. Let's look at this red candle. This is in a 4 hour chart. So right now, this one candle represents 4 hours. So guys, if I was to change this chart to a 1 hour chart, this one candle should break up into 4 separate candles, right? Because now each candle represents 1 hour. So let's look. It actually changed my drawing. But if this was our 1 hour, our 4 hour, this would be 1 hour, 2 hour, 3 hour, 4 hours. So this highlighted region right now, okay? I don't know why it won't let me start right at the start of the candle, but you guys understand what I'm saying. These 4 candles that are within this yellow rectangular box equals the 1 4-hour candle that I showed you before. If you take this down to 30 minute, it's gonna be even more candles. So it's basically showing you that the lower time frames give you more detail. The higher time frames give you a general picture. Just remember that, okay? Higher time frames give you a bird's eye view because it's almost like thinking about a zoom level. If you zoom out, you can see the big picture, but when you zoom in, you get to see the details of the picture. That's the same thing that's happening with the chart. If you're looking at like a daily time frame, look at that area that I had highlighted, which right here, see this little yellow area? Before, this was showing me 4 hours, 4 candles. But look, I moved out to the day. There's 24 hours in a day. Now it became a little speck, right? If we go to 4 hours, guess, right? Go to 1 hour. Y'all see what I'm saying? It shows you the detail. So you just got to keep that in mind, that you want to look at the different time frames in your analysis, and you'll learn about this as you get further. I just wanted you to understand what these candlesticks mean, all right? So each candlestick represents a period of time. What's better to trade on? We'll talk about that in a second. So you want to analyze the charts on higher time frames, but when it's time to actually place a trade, you want to be on a smaller time frame so you can be on the detail. So it's almost like thinking about, if you're looking at, let's use a GPS for a second. If you're driving from Miami to New York, right? And you know that's your starting point and your destination. You want to see, you know, the GPS usually gives you a zoomed out version so you can kind of see that line going all the way up the East Coast. But if you actually want to know which corner you need to turn on, what do you guys have to do? You got to zoom in, right? You got to get to street level. Does that make sense? If that makes sense to y'all, drop some sevens, okay? So you want to look at the charts to get a general idea of what's happening in the market from a higher time frame. But when you're ready to actually execute and buy or sell, you got to zoom in to a lower time frame to make sure you're doing the right thing. Cool. Got the sevens coming in. All right. So I went over this last night, but I'm going to go over it again for everyone on the call. All right. There's 3 ways that the market moves. The markets move in 3 directions. Write this down, okay? The market moves. Sorry. I'm not good with these little lines, right? Oh, I see what's happening. I unlocked it. Okay, I got it. So the market moves. What is happening? Don't want me to be great. Let's do this for a second, man. Hold on. What is going on? This worked last night, didn't it? Oh, I see it. That was my dumbness, guys. Oops, my bad. Okay, so here it is. The market moves up. Okay, so it starts at a low point and it moves up. The market moves down. Okay, or it moves sideways. Okay, write that down. There's only 3 trends in the market. It's going up, it's going down, or it's moving sideways. Okay, now let's take a look. If I was to zoom in on this little area right here, this area right here, which direction is the market going right in this yellow area? What's happening right here? Up. Yes, the market right here in this little area is going up. So let's look at it here. Which direction is it going right here? Down, right? Perfect. Down. Now let's take a look and let's see what is the market doing right here. Let's move it over. Sorry, guys. This thing don't want me to be great. In this little highlighted yellow area right here, what direction is it going in right here? Okay, Tia, I see you using the right words, consolidation. It's going sideways. It's neither going up or down. It's kind of just ranging, right? So think of a sideways market as when it's not really going in any direction. It's kind of just staying the same. It's consolidating. It's going sideways, all right? So you always want to look at the market, guys, from the high time frames, like a daily time frame or a 4-hour time frame. And when you're looking at price, you want to figure out what's going on in the market right now. So right now I'm on the daily chart. And if we look at this just from here, from what we can see on the screen right now, would you guys agree to say that around from this point, I'll draw rectangles. From here to here, the market was consolidated. Then it went into a downtrend. Then it went into an uptrend. And now it's back in a consolidation. Can y'all see how that makes sense? Drop a yes in the chat if that makes sense. Okay, so depending on where you are in time or depending on when you're looking at the market, that's the first thing you got to identify, like what's going on? What's happening in the market? So let's just look at this for a second. So I'm going to draw a vertical line from right at this point to where price is currently at. So we're going to look at between these red lines, okay? Let's look between the red lines. Now, wouldn't you guys say it's safe to say? So now what you want to do, once you are looking at your point in time, and I'm just showing you guys so y'all can kind of see through my eyes and see what you need to be looking for in the chart, right? You've got to look at this little area. So just think about the area between the red lines. You want to look for like the lowest point, which is about here. I'll look for the highest point, which is about here. Boom. So it's safe to say that right now the market is in a consolidation, right? And if you look at the bottom, this is since April to now, the market on this particular pair has been consolidating on a daily time frame. Now, does that mean it's consolidating on the smaller time frames? No, and we're going to look at that. But from a daily standpoint right now, we can say GBP USD has been kind of consolidating. The lowest it's got was this point. The highest it's got was this point. Does that make sense? Y'all follow me so far, right? Now let me show y'all how things are going to change. So this is the daily time frame, and I'm going to label this so we can keep it super clear. So we'll say this is the daily high, and this is the daily low. All right. Now let's go down to a smaller time frame. Let's go to the 4-hour, and let's see how this thing changes. So now let's get back between those same amount of lines on the 4-hour time frame. Okay. So there are our red lines on the 4-hour. Okay. Boom. So now what you want to look for is on the 4-hour. So those white lines say that those are the daily highs and lows. That's the highest and the lowest price went within this range. Now that we're on a smaller time frame, can't you say it's safe to see that you can see some other areas where price kind of went to? We call it a resistance or a ceiling. I'll show you and then I'll explain it after. Y'all notice like right here, right here, right here, right here, it's kind of around the same area. So if I drew a line, isn't it safe to say that price kind of went up near this white line or this point, then it dropped. It went up again, then it dropped. It went up again. This time it broke through and went up higher, then it dropped. Then it went up to it again, then it dropped. Then it went up to it again, then it dropped. Again, it dropped. So this is called, guys, what we would call a ceiling. Why is it a ceiling? Because several times over the history of time, price approached that level and then reacted. Price approached the level, then reacted. It did it like 1, 2, 3, 4, 5, 6 times. That's safe to say that this is what we call market structure. Think of a house. It's a structure. That's the ceiling. That's the roof. We call it the resistance, okay? That means that price has gone up to that level, and when it gets to that level, typically it reacts the opposite direction. So this is how you're able to start analyzing charts to understand when to place a buy or a sell. So think about it this way. If based on what we're saying right now, and it's other factors outside of this, guys. This is super basic, but you got to understand this stuff first. If price gets up to this level, it usually goes down. And when we think price is going to go down, guys, what do we usually do if we're going to place a trade? If we're speculating that the price is going to go down, do we buy or sell? Sell. Exactly. Okay? So it's safe to say that when price approaches a level of structure, which is this line this imaginary line I drew here, it went down. Okay, it approached that same level again. History repeats itself. This might be a good opportunity to sell, because usually when price gets near this level, it goes down. Enter a trade, you're in a sell, boom. Does that make sense, guys? Okay, does that make sense? If you get just the concept of structure and support and resistance tonight, when we start to give the trade ideas and you start to learn how to go to your chart and draw your lines, you're going to be confident in the trade, because you're going to say, okay, this is a level of structure. This should drop, and you'll see why we call certain trades, okay? So it goes here, boom. It comes again. Now look at what happens, because it's not going to be 100% accurate, guys. We can't predict the market. We just can't watch what it happens and read what it tells us. So look what happens. Price went down, right? Comes back up again. It gets close to our structure level again, our resistance. But this time, it didn't go down, right? It went up some more to the higher line, and guess what it did then? Then it went down. So you can't say 100% of the time when price gets here, it's going to go down. Now, it may do that a lot of the time, but you can't be 100% guaranteed, okay? So price goes to that line this time, it breaks through, and this is actually the best time to trade, and I'll talk about that in a second, is when price breaks a structure. That's when you have a great opportunity to place a trade, because it never does that. So if price breaks the line, it's probably going to continue to do what? Go up. So you could have caught this trade if you said, hey, it didn't go down like I thought it would. It's changing trend. You could have caught this for, 150 pips to the upside, and then it went down. All right? Well, we ain't get there yet. But let's just say, so price went up, then it went down again. So now we back down below our line. Guess what it does again? Goes back up to our line again, and then it does what we expected. It went down. Did its thing. Guess what? It goes back up to our line again, went down. Goes back up, went down. Goes back up, went down. So this is what we call a level of structure. This is basically saying that when price gets around this level, I'm expecting it to react. I'm expecting it to go down. Okay? This is when you start to look for trade opportunities. So there's different things that you're going to do once price gets around that level, but you know that when you start looking at a chart and you know that this is a level of structure and price is approaching that level, you're now glued to it, because you're like, okay, it's approaching our level of structure. We should be looking for a sell real soon. And once certain things start to happen in the market that indicates a sell, that's time to trade, place to trade, get into the sell, okay? Does that make sense? But I'm just trying to show y'all what structure is and some of the things that you guys are looking for. If that makes sense so far, guys, drop some sevens. Okay, boom, I see some sevens coming in. That's what's up. So remember the top thing, this is how I remembered it. And I kind of like to teach y'all the way that worked for me. When you want to think about resistance, it's the top, right? So I like to say the roof. So in structure, the roof is the top of the structure. So the roof, and I know roof starts with R, resistance starts with R. So the roof is your resistance. Okay? Why wouldn't that be a buy if it goes up as well? It would be a buy once it breaks the structure. So let's just say, you see how it got to the line and it didn't drop, but it actually went higher? Now that's a good indication that price is not going for a sell. It's actually going higher. So now it's time to buy. but you've got to wait until price gets to the level and watch certain things that happen. That's where, like the candlestick Bible that you guys heard Gilberto talk about, certain candlesticks are indicators that certain things are going to happen. Okay, so it could, when it breaks the structure, that is a good time to do the opposite. Okay, but we're going to talk about that. Like that's more advanced. I just want y'all to understand, you know, support and resistance. So roof of the structure is resistance. Okay, always remember it's the resistance. It's the top. It's like if you're trying to jump and you got a ceiling, you know, you're meeting resistance with your head. Okay, are your lines on the wick or the body? So for this example, because we're just doing a high time frame and I'm just really going over support and resistance, for this example, because everyone on here is really new, I don't want to go into wicks because I just want people to see the level. But for me, James, for you, I know you've been doing it a while. When I'm actually drawing my zones, I use the body because the wick, guys, and what a wick is, okay, let me just show you all since he mentioned it. A wick is this. It's literally like a candle. So if this is a candlestick, this green candle, you see how this line is above it? That's the wick. That means that price went in that direction but came right back down. It closed underneath. So it wicked up. Usually a wick indicates, you know, market manipulation. Sometimes it's hitting stop losses. I ain't even want to talk about all that right now, but draw your line on bodies of candles, okay? Or draw your lines on the bodies of candles. So guys, I just wanted you to see the resistance. Now let's look for the support. Let's do the same thing, but looking for the low areas, right? So let's look. Right around where I have my cursor now looks like a pretty good support, right? Yeah, let's draw it there. And there's no right or wrong, guys. So sometimes you're gonna mark up your charts and you're gonna have lines at different positions, but it's gonna be in the general area. So it's not specific. It's basically what makes sense to you because you're looking at the markets through your eyes. You may interpret this chart completely different than I interpret it, but if it makes sense to you in your analysis, then you're not wrong, all right? So where I drew this line just now, guys, if you look, the reason I drew it here is because look, price came near to it. Price actually touched it this time, came near to it again. This time it came down to it and then broke it and then went back up to it, broke it a little bit, went back up, then came right back to the line, came right back again. So this is just the total reverse of the other of the roof. This is the floor. This is the support, the floor, okay? The floor basically means that when price gets near that level, what does it usually do? It goes up this time. So now when you're getting price near to a floor, this is a good opportunity to do what? To buy, right? Because when price gets to when you're speculating that price is gonna go up, that means that you're looking for a buy. Does that make sense? Or did I lose you guys? Okay, makes sense. See, one person said it makes sense. What about the rest of y'all? And if it doesn't make sense, y'all feel free to say it don't. I love y'all. I don't mind. Okay. See, Tiara, that's what I'm talking about. Okay. So drop in the chat for me, Tiara. Okay, Ken is lost. No problem. See, I love it. See, some people get it, some people don't, and that's fine. Repetition is the mother of all learning. So Sunny says, you're looking for a low floor to buy and a high ceiling to sell. Exactly. You always want to buy low, and this is how you think about it. Let's think about it in products. Let's think about it like if you are at the mall, right? If you go in and you're going to buy a pair of sneakers and it's on sale and the price is low, what do? You buy it, right? But if you're on the opposite side and you have a product and the value of that price goes up, what do? You usually sell it so you can get more money. Make sense? So just think about it. If something's on sale, the price is low, buy. The price is high, sell. Or if you source products, you buy wholesale low and sell higher. Boom, perfect. So Ashley says, so if you're buying low, you're buying when price goes down. You're buying when price is down and expecting it to go up. So that's a great distinguish, like something I got to distinguish between, right, Ashley? Think about it this way. When you're buying, you're speculating that where I am in time, price is about to go higher. So if you know price is going to go higher, you want to buy it while it's low. Okay? You want to buy while it's low. So if you're looking at a chart, you don't want to buy when price is at the height, because why would you pay the most expensive price for something, right? You want to wait till price is low. Then you say, if it's at this low, it'll, okay, great example. Well, actually, it mightn't be that great for you because you're in the Bahamas, right? But for everyone here in the States, think about when COVID started, right? A couple of months ago. Y'all remember what happened with gas? Gas was super low. So that was the time you wanted to fill up all your cars, fill up your boat, right? Because gas was low. So it's time to buy. So if you see gas go up to $4.50 a gallon, you ain't really want to buy more of it because that's the highest it's ever been. You want to wait for it to drop before you buy. Does that make sense? It's kind of like, what else is something that kind of goes up and down in price all the time? Maybe something in the grocery store. So Ashley, I know you're a baker, right? So let's say chocolate. Let's say you go to the food store or you go to the store and you're looking to buy chocolate and it's on sale. It's on sale, so you're gonna buy a lot of it, right? Because it's a low price. Now, if you know chocolate is usually $2 for the pack and it's now 50 cents, you're gonna buy as much of it as you can, right? Now, if you know it's usually $2 and now there's a shortage of chocolate and you go to the store and chocolate is $5 a pack, you're like, I'm gonna wait till price drops before I buy more. Does that make sense now? Does that help? So think about it like that. That's why these lines on this chart is so important, because if you know that the highest this price has been in the last 3 months was where this white line is, and I'll make the white line blue. I'll make this line blue just so we can know when we're talking about the daily and when we're talking about the other one. So the blue lines are the daily. So in the last 3 months, this was the highest price got, 1.28151. That was the highest it's been. So guys, if the market is moving and price gets to 1.2850, do not buy, because it never got higher than 251. You're expecting it to actually go down now. Make sense? Same thing on the downside. This is the lowest price this currency pair has been. It's been 1.20702. So if price gets to like 1.20973, don't sell it because it's probably going to go up. So that's why drawing these lines and having this little analysis, and guys, you literally want to talk to yourself when you're doing this, because you got to talk yourself through this, right? So on the 4-hour time frame now, and I'll label it, right? So this is the 4-hour resistance or ceiling. And this number here is the 4-hour support or floor. Okay, so the blue line represents the daily high and low. The white line represents basically our 4-hour high and low area. Okay, so that's cool. Now let's drill down to the 1 hour. Let's see what happened between these red lines in a 1 hour period. Now let's look at it. Now we're looking for another area. So you see where my cursor is now on the 1 hour? So on the 1 hour, it's safe to say, I'm gonna make this one yellow just so we get different colors. Right around where I'm at right now is a good place to drop a line. Because check this out. It approached the line here, it approached it here, it approached it here, it approached it here. Then eventually when it approached it this time, it broke through, boom. But it came back down and approached the same area again, went all the way down and approached the area again. So that's a level of structure. So these are the things you're looking for, because what you're looking for when you're looking for, to place a trade is you're trying to find areas where when price gets near these areas, it reacts. Now, we don't know if it's going to react up or down all the time, but a reaction should happen. Either it's going to go up or down. But when price is kind of in the middle, like around here, let's just say like around here, this ain't really important. You don't know what it's going to do because it's kind of in the middle. You've got to find an area where price reacts to make a trade. You don't want to trade in the middle because you're literally guessing. You want price to get around a level of structure before you actually place the trade. Does that make sense? Just tell me if that makes sense so far. Okay. Who's LG Stylo? Let me see. Who's that? So who said work, sis, work? Okay. So let's look for, so this yellow line I just dropped is like another level of structure because it reacts even to the upside. Check it out. Check this yellow line. Remember we were looking at it as a resistance, right? Now when it broke through the resistance, guess what happens? It goes up and comes back down near the same area. Now that resistance turned into a support. That's how you know you're at a good area of structure. When a resistance, once it breaks through, it now becomes a support. Because look, price was approaching the line. This time it broke through and then it went up. And guys, look where it came right back down to. Our area of structure. It comes close to it from the upside and then it reacts. So you know you're at a level of structure. It came back again, went back up. Then this time it broke through, and when it went down, guess what? It came back up again and played around right near the area. Check it out. So what you got to get good at the beginning, guys, okay, is identifying levels of structure on a chart. That's really what you should be spending, like, especially now that you guys are live trading or demo trading with the trade ideas. Just spend your time doing the chart work, like pulling up charts where you got downtime and just looking at them and analyzing and finding areas of structure. And don't feel no way, like send me your chart and say, Sophie, how does it look? Now, I'm no master trader, guys, okay? But I can look at a chart and say, okay, I see how you can see that that's a resistance. I see how that's a support, because you may draw different lines than me. Now, here's something that I want you guys to look at too. If looking at the candlesticks is kind of difficult, you see this little icon here? You can change it to a line chart. And look, now it becomes lines. Now you can see the areas of structure way easier because you don't have all that noise. You literally can see where the peaks and valleys are. Okay? Nicole said, I was confused with the time frames at the bottom of my charts. Okay, I remember Raquel had reached out to me about that. The time zone that shows on your MetaTrader 4, guys, is based on your broker. Okay, so it's not your time right now, because if your broker is using like time in England, it's going to show that time. Okay, but it's actually in real time for you. But what shows at the bottom may be different. Or when you place a trade and you look at your history, the time, you'll be like, I didn't place this trade at 6 in the morning. It's the time of your broker. Okay, but you're actually placing the trade in real time. All right, so that's the only, and you can't change it. That's the only thing that kind of sucks. Your broker controls the time that's shown on your app, on your MetaTrader. All right? Does this make sense so far, y'all? At least a little bit more sense. And the Academy guys have tons of video on this stuff. But I wanted to do it with y'all so when y'all watch it, it makes a little bit more sense now. Okay? Makes a little bit more sense. So let me get my phone. Let me show y'all something. I'm gonna pull up one of the trade ideas that we sent out this week that we won. And then we're going to analyze the chart. And this is where you want to get to, okay? Hold on a second. This is where you want to get to when trades come out, instead of just, right now, you're just blindly following my lead. And I appreciate y'all for trusting me. But when you start to understand this type of stuff, you want to start pulling up your trading view and looking at the actual chart so that you can make an educated decision to say, I don't really agree with, I don't see what Sophie's seeing for this trade, I'm not gonna enter, okay? So this is what I do when I get trades from educators. So let me just bring up one of the trades from this past week. Let's look at odd cat, okay. So to change the pair, you just click up here, guys, and just literally type in which pair you wanna look at. So I wanna look at the Australian dollar, Canadian dollar, because this is one that we traded this week. All right, I'm gonna clear all the stuff off, and you guys can see I already had stuff on there, right? Because I gotta make it make sense to me. So the trade came out, and it said sell odd CAD, and then it gave me the take profit and stop loss. Y'all know that's the stuff that comes out with the trade. So here's what I immediately do when I see a trade idea. I go to the pair. Okay, usually I look at the 1 hour time frame, like if it's a trade signal, because normally trades that come out, we're not going to be in them for days. We're going to be in them for a couple of hours. So the 1 hour is a cool place to start. Okay, so you go to the 1 hour. I go to my little horizontal line, and then trading view, guys, over here on the left is your toolbar. Okay, you click here and you see all the different options. You could pick a horizontal line, a vertical line, arrows, whatever you need. Go to horizontal line. So the first thing I do is I look for the take profit and the stop loss price. And then, but this is going to be kind of tough because I don't know exactly where we were in time when this trade happened. Let's see if I can look at the time. This is at 10:38. This is at 10:38 on, I don't even know what day. Maybe on Friday? No, the 15th of July. So let's look around here. Let's look, let's zoom in. So this is the 15th of July and it was 10:38 p.m. The 15th around 10. 10 is what? 8 is 20, so 21, right? 21 is 10 o'clock? Or 22? 22? 22. The 15th at 10:38. Let's just look around here. Let's just draw the line right about here. Oh, I wanted a vertical line. And guys, you don't have to do this because you'll be actually in current time. I just going back in time so we can kind of see where the markets were on that day. So you don't have to worry about finding the time. It's going to be like current. It's just that markets are closed now, so we doing a history lesson right now. All right. So let's just see. And I might be off a little bit, but let's take a look. So where I drew my red line, or I'll turn it to white so it's easy to see. Okay. Now the trade that came out said the stop loss of odd cat is going to be 0.9466. So I literally come to my chart and look for that number. So if you look over on the right, I'm looking for 94466. 94466. So it'll be right around here. Boom. That was our stop loss. So just for this example, I'm gonna make it red so you know red represents stop. Then the take profit was 94281. 94281, or around there. So let's just make that green. Now, just based on this, guys, okay, trick question. Based on the fact that our stop loss, what our stop loss and take profits are, was this trade telling us to go for a buy or a sell? Let's see if y'all can deduce that from that information I just gave y'all. Let's see. Let's see. Okay, Charisse. Okay, Ashley. Okay, Leonard. Sonny. Boom. It's a sell. How do you guys know it was a sell? How did you know that? How did you know it was a sell? Going down, because it's a down. It's going down, right? So if you look at this line, so your stop loss is always going to be above, right? Your take profit is always going to be where you're trying to go. So because your stop loss is higher than your profit, you know that you want price to go down. You want price to go towards the green line. Your take profit, guys, is always your target. So if your target is down here and your stop loss is up here, that means that you are expecting price to go towards your target. So you're expecting price to go down. Okay? So check it out. So I was spot on with my timing. So let's just say, and I'm gonna see, I'm on the pro, so I should be able to do this. I'm gonna take time, I'm gonna go back in time, okay, to right here. Can I do it? Yeah, you should be able to do it, right? Boom. Okay, so now looking at the chart, it basically, when you have the pro version, guys, you can like go back in time and it's called back testing. So you can like look at things that happen in the market, make your analysis, and then let it play out and see if you're right or wrong. So right here, where this line is, this trade said, basically, when this trade came out, this is where the market was at, right where this candlestick is now. The trade told you to sell odd cat. This is gonna be your target, this is gonna be your take profit. So what you could do is let's look at what's happening in the market right before it actually happened. Guys, look what's happening. So price was going up, made a big drop down. Then it did what? It consolidated, right? Remember this. every time the market consolidates, after a consolidation, it has to make a move either up or down, because the consolidation is just the market building up to go into an up or down trend. Okay, so whenever you see consolidation, that's the type of time when you want to start looking at the market, because you know this is a good opportunity for a trade once you identify which direction the market's going to go in. Okay, so if you're looking at this right now, prices is consolidating right around this area, right? Right in this area. This is the consolidation area. Boom. It's consolidated. Make sense? I'm going to move that because I want y'all to be able to see it well. Right? So right in this area, guys, price is consolidated. Okay, cool. So I just use that like that. So price is consolidated. Now, you're saying to yourself, okay, so how do I know the market was going to go down? So there's a couple indicators just from looking at this on the 1 hour time frame, and then we're going to go down and you'll see why. Go into like the 15-minute helps. So on the 1 hour time frame, price is consolidated. But look what starts to happen. It's around here, then it makes this powerful move down with this red candle. Remember when you see a red candle, guys, price is going down. When you see a green candle, price is going up. So it makes a big move to the downside. That's an indicator. Price looks like it's building up momentum to go down. Then this next candlestick here, guys, it's called a Doji, okay? And this is where that candlestick Bible comes in. You look at this and you're like, price, this is basically saying that price went up and then it came all the way down. So it tried to go up, but it couldn't maintain it. It came down. So I was like, that strong candle before showed that price is trying to go down. Now this candle said it tried to go up, but it couldn't maintain it. It came back down. Price might be going down, but that's not enough for you to actually get into the trade. Now what you got to do is go down to like the 15-minute time frame, and let's look. Now we look. So price made that move down, kind of consolidated again in the area. It went up, came back down, and look at that next candle. Moving down. It's moving down. So you can say, price looks like it's about to make a move to the downside. We call this sell trade. Okay, there's different indicators and stuff that you can use. I don't really use indicators because it just confuses me, okay? Some educators live by indicators. Some educators teach what they call naked trading, which is no indicators. You got to find the educator in the academy that suits you, that makes it make sense to you. You may not look at the chart and it makes sense to you the way it makes sense to me. That's why we've got 100 educators so you can find who works for you. But let's just take a look at this. So this looks like price was about to make a move to the downside. We call the sell trade, right? To say, hey, get into this trade for sell and let's see if it's going to hit our target. Now let's see what actually happened, guys. Boom, I'm going to press play. So here's what happened. And I'm going to do it for the 15-minute chart. So each one of these candles represents 15 minutes that you're going to see. So it moved down even more. Boom, in our direction. Okay, even more. It's heading in our direction. We're winning. We're in profit. It retraces. It goes up a little bit. Goes up a little bit more. A little bit more. Right to our line. Right to our stop loss. But it doesn't hit the stop loss, and then it starts moving down. Moving down. It's consolidating again. Now it's starting to make the move to the downside. Okay? We're just watching it play out. Right? You're looking at the wick, guys, right? It didn't it didn't touch the line. It got close, but it didn't touch it. Now it's starting to make the move down. Going up. Right? Going up. Still didn't touch it. Close. Now it hit the stop loss. Boom. So guys, it hit our line. And I think this was a trade we lost. Okay? This is actually one of the trades we lost. And the reason we lost is because, look, price started to go in our direction. If you had seen it here and you closed out the trade, you would have closed out profit. But it didn't hit our take profit. It hit our stop loss. So we would have lost the trade. Okay? But let's just see what ended up happening. Let's see if it ever got down to our target. Let's see what happened. Move down. Kind of in the area again. Hit the stop loss again. You'd have been out again if you had another opportunity. Now it's starting to actually make a move to the upside. So the trade didn't work out the way we thought it would work. And that happens sometimes, guys. You know, it happens sometimes. But based on different analysis, you know, And it might have been on the 15-minute time frame. It might have been something on the 4-hour time frame that made, you know, like, look at this. This is what really was the analysis on this trade. So check this out. And then we're going to get out of here. But I hope this is valuable so far. If you look at, let's remove the lines for a second. So it's safe to say right around this area on the 4-hour time frame, price got close to this line over and over and over, right? It was, I think, where we were. Hold on, I got to go back to the 1 hour so I can see the spot. It was right about here. Hang on. It was right about here, I think. So if you look at this, right? Price came around this area. Boom, here, 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 here. Came back again. We're expecting price to go up normally, right? Because if price gets to a support, normally it moves up. So you're looking at it, but then look what happened. This particular candlestick, guys, was the determining factor in going into this trade. You see this candle here? It closed a little bit below our support. So normally, like we said, if price doesn't react to the upside and it relaxed, like it looked like it was about to make a move down, which is why we call the trade. And it wanted to go down, but it just didn't. So we lost the trade. But this candlestick was the determining factor because normally it would have gone up. But because it closed below that level, my indication was price is going to continue to go down. It went down a little bit, but not enough to hit our target. Okay? So that's basically how this thing works, guys. So you want to start to, you know, I know it was a lot, especially if you're brand new, and we don't expect you to get it in one go. It's like Spanish or French or Chinese. If you go to China, you're not going to understand Chinese your first day, your first week, your first month, right? It's going to take some time, but the longer you hear the language, you'll start to pick up on words. So I'm sure some of you guys tonight started to pick up on some little concepts that you may not have even grasped before. And as you keep getting on the sessions, getting on the Go Live sessions, getting into the academy, getting on these trainings that we're going to be doing as a team, more and more concepts are going to start to make sense until it all makes sense. And then you can start forming sentences. Then you can start doing your own analysis on your own. So just know that repetition is the mother of all learning. And you're not expected to get it right away. But the reason that you cannot give up, guys, is because when you get this is going to change your bank account. It's going to change your life. Okay? So we put effort and time and give things time that don't make us no money. Don't quit on this. Because when you get this, you are self-sufficient for the rest of your life. Straight up. Straight up. You know, so just be patient with yourself. Give yourself the time to succeed. Don't give up. Yes, it sounds like Chinese or Dutch or French to you right now, but it won't always be that way. It's going to start to make more and more sense the more you do it. So what you want to do is make sure you're going through the academy, guys, watching the pre-recorded videos, but also make sure that you are hopping on the Go Live sessions. Okay? The Go Live sessions are where live educators are doing exactly what I'm doing with y'all in the markets. They're looking at the live markets and they're telling you what they're seeing. And then when they actually see a trade setup, they say, enter the trade, and you make money with them on the sessions. Find an educator whose style you like. You know, some people are just too boring for me to listen to. Some other people are too extra for me to listen to. So you got to figure out who vibes with your style. And if you like their teaching style, get on their sessions all the time. You're going to start to see the markets their way. You're going to start to learn their strategies. And then on the sessions, you're going to make money. You know, so I call this the Netflix of money. You know, the same way that we can watch Netflix and don't make no money, you can watch these live sessions that are actually going to put money in your pocket. And like Nicole said on Friday when we woke up, she woke up to a sleeping bag. What does that mean? I sent out a trade at around 11 p.m. on Thursday night. They placed the trade. When she woke up, it was in profit. She didn't have to do no work. She didn't have to clock in. She didn't have to see no clients. She clicked some buttons on the phone and woke up to profits. Guys, that's the kind of life we're creating for ourselves. It's not going to be that easy. Why? Because if it was that easy, everyone would be doing it and everyone would be rich. But the difference is the people who stick and stay long enough to see the results, man, freedom is ours. You know, freedom is ours. So I'm hoping that, you know, this was valuable. I'm hoping that you guys took something away from this training tonight. If you did, definitely, you know, drop some things in the chat in our Project 1000 group. And I always ask you guys to make sure you engage and encourage others in that group, because people who aren't hopping on the trainings, they're missing out. So you got to encourage them, let them know you got value, you learned something, so that the next training, they won't want to miss it. Because this is a family, this is a team, and like no one's left behind. If you made a commitment to say yes to yourself and learn the skill set, we're committed to making sure that you learn it. But we got to hold each other accountable. And sometimes people just need that extra push to hop on the calls, you know, to get out of their comfort zone. But when we start securing, you know, $100 a day, $500 a day, $1,000 a day, you know, that's where we're working towards. But we got to start making $5 a day, $10 a day, you know, and those things will change, but you got to start somewhere. So guys, if this was valuable, man, I appreciate you. You know, I recorded this, so I'm going to drop the recording from last night's training with the edification and how to do an effective three-way call in the group tonight. And then I'll also drop this one because you guys may want to watch this on replay. But don't sleep on the go live sessions. Get on TradingView, pull up the chart, try to find your highs and lows, screenshot it, send it to me. We can talk about it. Y'all, let's get to the money, okay? This is the money. Understanding what these charts mean, you may not understand it at all now, but your goal needs to be, I'm going to get this. I'm going to learn this because this equals profits, all right? So guys, I appreciate y'all for hopping on, man. Thank y'all so much for always spending some time with me. Now I'm about to go eat, okay? So y'all have a good night. God bless, and I'll talk to y'all soon. Take it easy.